Welcome to Leizer Property Management, your local expert in U.S. real estate investing. In this video, we'll cover the top 4 most frequently asked questions that Canadians ask about U.S. real estate investing. The first question focuses on the requirements and benefits of owning real estate through a corporation. Many Canadians refrain from purchasing U.S. real estate because they think that you can only do so through a corporation. The fact is that while it's not necessary to set up a corporation, it is highly suggested that you do so. This isn't complicated and shouldn't act as a deterrent because it's actually a really simple process if you have the right guidance. There are many different corporate structures that can be used for a rental property business, but it is most important to select the right structure, one that provides appropriate legal liability protection and offers the biggest tax savings for Canadians. We partner with cross-border accountants and lawyers that specialize in this field and can answer all your questions relating to these matters. The second question revolves around the uncertainties of taxation. We are often asked whether Canadian property owners have to pay higher tax rates than U.S. property owners, and also whether Canadians are double taxed. Our response to these questions is simple. In Florida and Arizona, Canadian property owners are subject to the exact same income tax rates as any other owner, including U.S. owners. With respect to double taxation, although Canadian investors in U.S. rental properties must file their U.S. taxes under the same IRS rules as a U.S. resident, Canadians can actually claim foreign tax credits in their Canadian tax filings. This means that the taxes paid in the U.S., which are typically lower than what would be owed in Canada, can be credited on your Canadian taxes owed, effectively only applying the Canadian taxes. So, in plain language, no, you would not be double taxed. Another great question we are often asked is whether today is still a good time to get into the U.S. real estate market, particularly since prices have increased in the last decade and the Canadian dollar has weakened. While it's true that real estate prices have increased significantly since the financial crisis, it's also important to recognize that rents have as well. This means that the return on investment, or the cap rate, remains very attractive, and in many cases even more so than in prior years. This, in fact, is the most important factor long-term real estate investors need to consider rather than the absolute levels of the house prices. Also, although a weaker Canadian dollar means that the upfront cost of acquiring U.S. real estate will surely be higher, it also equally means that the value of the monthly rental income, which is collected in U.S. dollars, will also be higher for Canadians when converted back to Canadian dollars. The important concept to understand is that the exchange rate does not impact the ROI calculation, because both the numerator, which is the monthly rental income, and the denominator, which is the purchase price, are both expressed in a common USD currency. Generally speaking, the exchange rate movements become a bigger concern when investors enter the real estate market for the short term, with the objective of flipping homes. Our investment approach focuses on long-term investing and generating excellent rental cash flow rather than short-term flips, which naturally carry higher investment risks. Finally, the last frequently asked question that we would like to address is whether investors need to own insurance on their investment properties, and if so, is it expensive? Insurance is not required by law. Depending on the investor's risk tolerance, they have an option to purchase insurance as well as the type of coverage. In our lease agreements, we require all renters to purchase a renter's insurance policy that offers significant benefits and protection to both tenants and owners. A typical renter's policy includes personal property coverage of $15,000 and personal liability coverage of $100,000. The great thing about the renter's insurance policy is that it's entirely paid for by the tenants, and the benefits are largely for the homeowner. Some Florida real estate owners choose to purchase additional flood coverage to protect from hurricane-induced storm surges. A typical flood policy would run around $650 a year in Cape Coral, Florida. We can help connect you with excellent insurance brokers who can assist you with different policies at market-leading rates. Thank you for watching this video. If you have any further questions, please don't hesitate to reach out to us.